Hey everyone, welcome to episode 74 of the MiamiTech Pod. I'm Cesar Fernandez, and we got Maria Derchi and Brian Breslin from the pod crew with us this week, and our special guest, Kaben Clauson. Kaben's the co-founder and COO of Pigeon Loans. Kaben, welcome to the MiamiTech Pod, man.
Great to see you all.
So Pigeon Loans is exciting. Why don't we just jump right in and tell the listeners exactly what you all are building and the origin story and all of that, and go from there with some other cool topics we can cover.
Yeah. Pigeon Loans is a peer-to-peer lending software platform. We're really serving the 70 million Americans who will borrow or lend money with someone they personally know this year, and maybe even much more, in recessionary environments, which who knows where we're going to be here in the next year, that actually can skyrocket significantly. And what we do is we're just a software tool that takes a lot of the awkwardness, frankly, and the pain that comes from these types of loans. And that pain is really when you mix money and relationships, like so many Americans do, things can get squirrely, things can get weird. You don't have paperwork around it. You don't know when people are going to pay you back. You have to remind someone once a month. And this was a problem that my co-founder, Brian, and I both really lived through personally. As younger people, we witnessed our family having to borrow and lend, and we saw how that could fracture relationships in weird ways. And then as we've gotten older, we've had friends that have needed help, and there's always just a bit of awkwardness around it. So we thought, what if we could create a really simple software solution that could help people, whether you're needing to borrow for an emergency, which is about half of our users. But there's also about half of our users that are borrowing to start a small business. What's interesting about small business in this country, and it's been such a joy to get to meet all these small business owners, most small businesses are never going to raise equity capital, right? They're not going to, that's just not what they're going to do. But there's millions of them started every year. And the way most small businesses in this country are started is through a personal loan from someone they know, or through credit card debt or personal cash they have. So giving people another tool to handle those relationships and also get these businesses started was something that was really exciting to us. And we saw that there was $250 billion a year that's moved in this way. Man. And there was really no software tool that had captured that. And we thought that's an intriguing problem to go after and one we were excited to tackle.
So assume you're the host of a podcast and you float it financially on your credit card every month, and your co-hosts are terrible at paying you back in a timely manner. Can that person use Pigeon Loans?
I think you got another problem. I think there's another service we can hire for you down here.
Is this for sponsors now?
Yeah. It's funny, man. That's awesome. And you guys, so when did you start the company?
We started this last year. Brian had started this up originally as like a side project. He literally had to do a loan with a family member. And, like any great software engineer, he looked for a software tool and there wasn't anything out there. So he's like, I'll build it, Yeah. And then Brian and I had been friends. We both moved to Miami, just over a little over a year now. And we really hit it off. We had a really good skill set mix. And we just thought this idea, was something we could get excited about because, not to be too cliche, but we thought, hey, this is something that actually could be really good for the world too. It's a cool theme. Americans helping Americans. It's kind of a very Miami type business in a way, helping people that are scrappy, borrow $5K, from someone they know and start up a hot dog stand on the beach or something and turn it into a real business.
That's awesome. And you all were in the last YC batch, correct? Y Combinator?
Yeah, we were winter 22. So we started in January and did that 3-month batch recently.
And what was that experience like?
That was life-changing. This is my second startup. And on my first, like every founder, and I'm still making tons of mistakes on this company, but with that first startup, you really do make a lot of mistakes. And I think it was good to have already gone through a whole company before I went into YC, because I was very, open, even more opening to listening to the partners and to my fellow founders and just trying to absorb as much as possible. And they just deluge you with a ton of information. And there's we got to learn about hiring from Twitch, the CEO at Twitch. We got to learn about team building from, literally the founders of Airbnb. So we're learning from people that have proven track records. They've been there and done that. And that was a huge benefit. And the other real benefit, I would say, beyond the network, which is kind of obvious, you're around a lot of ambitious, smart, intelligent people from all over the world. And that's really cool. But I think the time pressure of YC was great. Just that 3-month sprint where, it was intense and we were working harder than we've ever worked. And it forced us to move really, really quickly. And I think that's really healthy in the early days of a startup.
You guys did this, you did YC remotely, right? So you guys were here in Miami the whole time while everyone else was all over the world. Was there, any advantage or disadvantage of being in Miami while you were doing this? I know being in person is a completely different experience, eating at Michael Seibel's house or whoever's, and so on. But I mean, there are a fair amount of YC founders here in Miami right now, right?
Well, first of all, I think being in Miami is always generally a benefit. I just like it here, versus San Francisco, to be frank. I just prefer it greatly. But I'd say, look, I wish we could have been in person just because there's just something different about in person, right? I'm a big believer in that. But what was cool is there was 5 other companies in this batch from Miami, and that was by far the most ever. Miami's only usually had 1 company. In some batches, there's 0. So we kind of created our own little group, and we'd get together for coffees and dinners and things. And that created a little of that vibe. But yeah, it was good. It was good to stay in Miami, though, and, not have to go to San Francisco, although it would have been somewhat nice.
I do think a cool idea for YC would be if they kind of had a different host city every single batch, World Cup style, where, 1 year it's in Miami, the next year it's, wherever, and people just get that experience. Cause it's not necessarily 3 months, you're not going to be exploring the city every single day. You're going to be working your ass off and in an office or a conference room. It's really the network of those people around you. But it'd also be pretty interesting from an access and exposure to different startups. So, PG, if you're listening, free idea.
Yeah, we got to pitch them on this.
I mean, I could see an arms race now between cities. What was it? Move to Tulsa, which was giving people $10,000, and people still didn't take it. But I could see Tulsa or some other cities throwing down a few $1 million to get 200 founders to move there for 6 months. With the hopes that 10 of them stay. Great economic development boondoggle.
That's a good idea. We should, and if we should just have it come to Miami. Forget rotating the cities. We should just move it here.
Well, I don't know if you guys saw this. Paul Graham I think it was yesterday, tweeted he was having a conversation with Matteo from 8 Sleep, and within 30 minutes, he's like, I bought the bed. It was. So I'm like, maybe we're convinced.
I thought you were going to say that. I thought you were going to say that PG bought an apartment in Miami within 30 minutes of speaking to Matteo. Because I was like, that.
I bet he has a place here.
I mean, he lives in the UK, so maybe. I mean, it's easier to get here than San Francisco from the UK. So
Kaben, you mentioned you love Miami. Well, this is one of our favorite topics on the podcast, of course. So you, like me, lived in Chicago for a bit. I mean, you're from Chicago originally?
No, I actually grew up in Alaska, believe it or not. And before that, as a child, I spent time in... Yeah, that's a weird way to take the conversation.
You can't drop that on a podcast casually. Talk to us about Alaska, bro.
This is actually his 3rd startup. The first one was Moose Tech, and it didn't go very far outside of Alaska and Canada. But
the first one was built. Yeah, we built igloos and we rode around on polar bears and things like that. I mean, really, what was funny is my father was born in Alaska. We'd actually lived in South Africa for a time when I was a kid, and then we bounced around the States. And I think he wanted to go home and be closer to his parents. And look, I would not want to live in Alaska long term. Probably not the best place to build a startup unless you're doing something really cutting edge, maybe science or something. But incredible experience, right? The Alaskan, it really is the last frontier. Think about the type of person who moves to Alaska. Right. This is a real kind of rebel personality, real frontiers person. So I do think there's an entrepreneurial spirit to Alaska, frankly. It's a harsh climate. I'll tell you that the worst part about Alaska is it gets incredibly dark in the winter, right? It's incredibly depressing. The sun rises at 11 and goes down by 1 for a couple months there. But in the summer, it's the exact opposite. So if you ever get a chance, Alaska in the summer, it's beautiful, it's clean, the air's so clean, and the sun stays up almost all night. So you can be out golfing at like, midnight if you wanted.
Like, I don't know how true this is, but I assume that people raised in Alaska have way more grit than the average San Francisco resident.
You have to.
Hey, I'll take it. Yeah, that sounds right. I believe that fact. Yeah.
Okay, well, how long have you been in Miami, Kaben?
I've been here a little over a year. What happened was during the pandemic, I was running my previous startup, and I'll just be super candid. I was not pleased. In Chicago's a city I love in many ways. I have family out there still. It's incredible in the summer. But I was not pleased with some of the, it's a little more difficult to do business there, frankly. There's more taxation, but really Chicago's having some challenges as a city. It was both a business decision, but also a personal decision. And I kind of looked at two cities. I looked at Austin, Texas. I looked at Miami. Well, I did look at New York as well. And I thought, which of these would be the best fit? And I came down to Miami. I showed up at the networking event that's now the Freehold that's become the Freehold networking event. I think it was the first one, actually. And one of the first people I met was Chris Adamo. And what a character to meet, right? What a first impression, a great guy. And I just met some incredible people. And I think I made the decision right then. I was like, this feels like the right city for me. And best decision I've made. I've been a happier, healthier person since I've been here.
That's awesome, man. I feel like it's so cool to see so much of that, like, Silicon Valley startup story happen like before us, right? Like, you all are having a lot of success, building Pigeon loans, but like, in many ways, if you were to say that entire thing, but without telling me, that entire story, but without telling me the cities that you live in, I'd say, okay, like this guy is building a fintech, YC batch, like he lives in San Francisco for sure. So it's cool to see you really focus on building it in Miami.
And I'm always recruiting friends here. I think I've got like a 40% success rate, which I think is pretty high for like recruiting other founders. If they get down here for a week and they realize, because there's a lot of misconceptions about this city. A lot of people think it's only a party city. It's only a city with, glitz and glam. Like, and there's a lot more to Miami than that. And when people get down here and like actually get to a real neighborhood, they're like, man, this is awesome. So yeah, we're constantly recruiting. So
let's talk a little bit about, the consumer lending space in general, right? You all are definitely taking a crack at a big portion of that space and making those transactions easier, more transparent, all of that. But, from a macro level, Americans have a ton of debt, right? We are a country where there's $16 trillion of household debt. The last quarter, that number grew by $312 billion. Do you feel like the current state of things, and obviously like debt is not necessarily a bad thing, right? Like I would argue that, our access to credit is really what makes us such a dominant global economy, et cetera. But do you feel like we're entering a phase right now, especially with some economic uncertainty ahead of us, with a lot of folks, sounding recession alarms, where we really have to be like mindful and cautious of the amount of consumer debt that we're seeing in the country?
Yeah, Cesar. And I see it firsthand because I'm talking to customers all the time. And I'll tell you, I'm since I started working on Pigeon loans, I'm becoming increasingly concerned, because we get to see like under the hood a little bit, anecdotal stories from real people. And yes, consumer debt's never been higher. We have the buy now, pay later thing going on, where a lot of young people are just maybe not knowing the ramifications of that. Then you have student loan debt, where we've even had people refinance student loan debt using Pigeon loans, where they were 19, they didn't really know the ramifications of that. And I think there's an education gap here. And frankly, there's a lot of systems in our country that are designed to be profitable, and we're all capitalists, and that's why we love America. But there's also some really bad and ugly sides to that. Like look at the payday lending industry. I mean, this is an industry that's frankly evil. I mean, we're talking interest rates, 200%, 400% interest rates, and they hide these in little fees.
Right,
and
right.
people don't really know what they're getting into, and they affect minority communities predominantly. And one of the things we're proud about with Pigeon is 70% of all of our users are from minority communities, and that's really cool for us because these are the people that are disproportionately affected by some of these products that frankly they don't have your best interests at heart.
Yeah, let's break that down a little bit and talk about each of those, right? So in the US, we have this like massive access to capital gap. It's something I'm super passionate about. We could talk, for hours about this, but it's this weird problem where in order for people to extend you credit, you need a credit score. But in order to get a credit score, you need a loan, right? And you're in this like weird, it's like a huge barrier to entry to be credit worthy. And in many ways, like there is this whole industry that has been propped up for either a extending that first bit of credit with terrible terms for consumers, or b being a lending source of last resort with like even worse terms, right? So like let's say like junk credit cards with insanely high interest rates and low borrowing limits on the first end, and then on the second you have like the payday industry, which you mentioned these high interest rates. It's like I think people when they get a payday loan are in this like, okay, what is the payment? What do I owe you in 2 weeks? But when you look at that from an APY perspective and you're say like, what is the actual amount of, if that were an interest rate and you were to extend that annually, right? What is the actual amount of
Yep.
interest that you're paying? And it is in the hundreds of percent, but they call it a fee. They back it with a check, causes a ton of potential like withdrawals and all of that. Yet, and I've seen like time and time again like companies that have been trying to solve that problem, but they fail, right? Because underwriting risk is very hard in that space. Like any thoughts on, I mean, is like peer-to-peer lending or lending from friends and family, is that the solution? Like do you just, is there a trust factor there? Like talk a little bit about like how we finally solve this problem.
Yeah, great questions. I think selfishly we'd like to think Pigeon loans and peer-to-peer friend and family loans are the solution, but kind of we're a solution to a bigger problem out there, which is like, you're right, there is a real gap in this country on the access to financial products, and you're very correct. And I can, there's a really interesting story to explain this. Like, I spoke to one of our customers recently. She's a person that lives kind of paycheck to paycheck, right? And she happens to be a minority, and she's gone through tough circumstances. When she falls on hard times, she doesn't have a wealthy uncle or parents or anyone to go to. And that might seem like a small thing, but it's not, because when her car breaks down and she's behind, she has to go take out one of these payday loans. And I think where we're entering here is we're trying to make it a little less awkward instead of going to that payday lender. And a lot of people, by the way, what we've learned through our customers, there's a lot of shame around money. We don't talk about money enough in this country because it's embarrassing to admit you're poor. We live in the Instagram age where everyone's bragging about things they have, even if they don't have it, right? So a lot of people would rather go to a payday lender than ask a friend or family member just because they don't want them to know or to burden them. That's a huge issue. And I think even beyond that, though, one of the things we learn even in startups is, if you can't get off to a good start, where, if you, a lot of our customers don't even have credit scores. We realized, and by a lot, I mean in the small percent, 2-3%, but that's even a significant amount. And where do you go if you don't have that? You're just, you're stuck at like first base, or, that's the issue.
I mean, a lot of these things are because our system is basically designed by folks who had all these sort of luxuries or privileges or whatever it was, right? And then assumed that everyone else had these, or potentially maliciously designed it so that those who didn't have it would be excluded, right? Who knows, right? We can assume ignorance, for the sake of the conversation, and so I mean, this also ties into like, there's a huge percentage of unbanked or underbanked folks in this country too, who are keeping their money in cash under a mattress because they're afraid of getting robbed, or they're afraid that if they open a bank account they'll get deported, or whatever the case may be. Like, there's so many different angles to this, right? And I think it's a little excessive for us to think, oh well, Kaben, what's the solution, the silver bullet to all this? Like, this is I think more realistically, it's like, okay, like, how do we as individuals also help chip away at this? How do we help support?
Brian, no, I disagree. Kaben's going to solve this problem for everybody. Like, why are you trying to minimize his impact to the world?
Yeah.
Sorry, I just knocked $1 trillion off his market cap. Sorry.
Brian makes a great point, though, because there's a product we are working on. We're working on a crypto lending product. And I'll tell you, we're hitting roadblock after roadblock after roadblock because there's something in this country that a lot of people don't talk about: the lobbying industry. These industries are powerful, and they spend millions of dollars to these people that have personal relationships with politicians, Republican and Democrat. I hate to say it, Republican and Democrat, and they block innovation.
Brian's pointing frantically on the screen because I'm a lobbyist, but I only lobby for like tech companies trying to change the world. So come on.
You were pointing at Maria. That's the funny thing. It's like
we're all different. Yeah.
I thought everyone's orientation on the screen was the same. So I'm like pointing at Cesar.
Yeah. Cesar's a good lobbyist, and he's lobbying for the tech industry, but there's people lobbying for, payday lending.
AmScot is one of the largest contributors in like Florida in the consumer lending space, right? Like, these people are like, it's predatory. It's like,
I'm sorry, Cesar, for bad mouthing.
No, in fact,
no, that's our favorite hobby, is bad mouthing industries in which Cesar is participating.
No, Kaben, in fact, the reason I know a lot about this is because I represented a fintech company a while ago that was trying to disrupt payday lending, and they were a consumer lender that was licensed in Florida, and AmScot was like essentially trying to kill their business model because all they wanted to do is offer small dollar consumer loans with like way better interest rates, way better repayment periods, all of that stuff to Floridians. And AmScot was like lobbying that if you wanted to do that type of business, it had to be from a brick and mortar location like the ones they've invested millions of dollars in.
Right. And I think what happens, and by the way, I don't think all these people are evil. I think it's just the human nature of, I want to be incrementally wealthier or incrementally more powerful. And if that happens with enough people over enough time, it causes these things. And what we've noticed in fintech specifically is there's these consumer protections they have that are actually killing innovation, because we're a young startup. We just raised $2.5 million. That's not a lot of cash. So we can't hire a super high priced attorney to go in and help us navigate this landfill. And if you step in one spot, you're going to get blown up. So as a startup founder, when I talk to Brian and our team about this, it's a little scary to weigh into it. But that's the only way we'll get out of this, is with some kind of, real innovative solutions, whether it's crypto or otherwise.
Let me ask you a question on specifically on helping people build credit, right? So you guys are in a weird position because you're not a lender. So you don't have a ton of the tools that lenders have, like the ability to report payments to, credit, like credit bureaus and whatnot, right? But the people that you're connecting like individuals who are lending money to borrowers and getting paid back at probably like, really, really high rates because there's that trust, it's family, like you're not going to not pay back your family, et cetera, right? So is there, and we can cut this if you feel like I'm, dipping into a product solution that you guys are, rolling out, but is there a play where you convince regulators to view those payments or convince either the credit bureaus themselves to view those payments as an actual repayment of a loan to help the borrower build credit? You're
spot on. It's like you read our product roadmap before the podcast. We're actively working on that. It's a tough lift because, right, you could have two parties creating fake loans and lending to each other, and there's a lot of weird things there. But we're absolutely aiming to do that. A lot of our customers don't have the credit score either to get, a great, to get a credit card even, or get the right bank account. A lot of our business customers don't have the personal FICO. It's interesting. Your personal credit matters a lot when you're getting a young business loan. So we do want to boost it. What we're doing now is we're partnering with like Grow Credit and some of these other players. So, we're kind of like showing those offers to our users and trying to give them that opportunity. But you're absolutely right. And, frankly, what we've learned through this business is credit score is incredibly important. A lot of people probably don't think too much about your credit score, but that's probably because you have a good credit score. If your credit score is garbage, suddenly it becomes a really real problem. So yeah, you're spot on. We've already been talking to some of those agencies, and it'll be a tough lift, but if we can do it, it'd be huge for the business.
Cool. Let's talk about buy now, pay later, right? We've seen an explosion of BNPL in America. You have a lot of companies that have integrated it into points of sale at major companies, like everything from Amazon to Walmart to, massive retailers, et cetera. What are your thoughts? Is it a good development in American society or not?
Probably a disaster. Probably a total disaster.
I love the no hedging on this podcast. There's no I can see both sides. No, it's a disaster.
Well, in theory, it could be great, right? I need to buy, I'm kind of a gaming nerd, so I bought a gaming laptop a while back. I could have spread those costs out over 4 months, and that would have been something interesting. The truth of the matter, though, is as human beings, we're really bad at predicting the future. And it's really easy to be like, hey, I'm only got to pay, $25 next month. And then of course I'll pay that in the future. But I think what we're having in society is an inability to delay gratification that is becoming an epidemic, especially amongst my generation, millennials, and in Gen Z. It's like, and I think social media is a big cause, to be honest. I think that's where it starts. Not to get too philosophical on you, but I think the issue is you see people having these things. We know comparison is the thief of joy. We're constantly comparing ourselves to other people. We want it now. We want our shows now. We want everything now. And a lot of that's good. But I think this one is a potential bomb that's going to go off. We've been reading stats about how many people are behind on these, the default rates. I think the counter argument is, hey, people have personal responsibility. And for many Americans, they use buy now, pay later, and they always pay. And it smooths out their budget. And it's beneficial. So I'd love to hear the counter argument, but in my mind, it's a disaster.
Yeah, I think it's like a good tool if you're buying some type of productive asset, right? Like if I'm buying a laptop so I can start a business or go to school or whatever, that's the type of access to credit that's made America a really strong economy, especially we just talked about a gap in, lending for people that don't have high credit scores. If you're buying like Louboutins on BNPL because you don't have the cash to pay for them, and you want to, it's like,
yeah, Brian did that. He told me.
Which Brian, me or your co-founder?
No, you.
I mean, those were a business expense. I was trying out a career as an influencer. I misread the niche, completely. So now I have a tax write-off, but no.
But you look cool.
It was a weird afternoon wearing them. Yeah. So no, but I do think to follow on, there are some advantages in buy now, pay later, but you're right. You're right. As Kaben, is that people also assume I'm going to make more in 6 months than I make now. Right. Which has been a big slap in the face for a lot of people who don't make more now than they did 6 months ago, but
yeah, with inflation too, effectively we're all making less.
Well, then would buy now, pay later be a hedge against inflation? Like if I'm paying off this computer over 24 months, I may be getting a 5% discount, whether, if it's a 0% interest rate, right?
Yeah, but it's not a 0% interest rate. That's the thing. There is a segment of buy now, pay later that is essentially marketing that they do 0% interest as like an initial offer, which is essentially like CAC, right? And but then it's like pretty steep, credit card rivaling interest, right? Like these companies have to make money somehow, right? Like a firm is not going to like make a ton of money just like, floating hundreds of billions of dollars of consumer goods with a 0% interest rate. So I don't know. It's essentially like micro credit card purchases.
I'm going to throw out an idea for a product for whoever listening wants to take this. If you remember a few years back, there was this like maybe like 10 years ago, there was like Facebook games and all these other in-app purchases, but you could do things to earn stuff, right? Whether it was like answer this survey, do blah, blah. Someone needs to build that into buy now, pay later stuff. So like, all right, I may not be able to pay off these Louboutins or whatever, but if I do this survey, I'll knock off $5 off that principal, and so on. And like people can start doing like little mini side hustle, tasks.
Well, it sounds like Kaben can integrate that into Pigeon loans.
Look, it's kind of an interesting idea. Like one of the things we're thinking about introducing is like some educational components. Maybe what we need is help people understand how interest works and things like that. There is an education problem, right? We probably need to start teaching personal finance in high school. Like I didn't learn any of this stuff in high school. They never taught me how to make a budget. They never taught me to save, invest, none of it. So, and I was lucky enough to have a family that taught me some of those things, but that's not the reality for a lot of people. So I
think that you just nailed it. We are very like consumers in this country are just used to asking the wrong question, which is, what is this going to cost me every month? And if it's like, hey, a car payment at $600 a month, they don't ask what is the actual amount that is going down to like paying down the principal of the loan versus what am I just giving to the lender, like in that, $600 a month car payment or whatever it is. And, if we were to teach the cost of borrowing in this country in a real way, where we see people saying like, making that analysis, like, is the cost of borrowing this money so I can have this good worth having this good, right? And just that reframing alone, if every single ninth grader in America thought that way, I think it would drastically change the financial outlook of so many people.
Yeah, and I also notice, and we've talked with a lot of users who've even brought this up, a lot of people in their 20s don't think about their 30s. I just turned 34 recently, and I was like, when I was in my 20s, 30s seemed like so far away, and then even more so in your 40s. And I think that, and I don't know if that's always been the case, and maybe that's just human nature, but so many people finally get their life in order. But by the time they do, they've got 100,000 in student loan debt. Maybe they've got 10,000 in credit card debt. And that is like carrying around like a backpack full of rocks every day, like not just financially, but also kind of emotionally, and that's something we'd love to help people with if we possibly can, is like, if we could boost people's credit, give them some education, help them get the capital they need. Because also with Pigeon loans, we don't want to like continue a problem that already exists, right? And we do put some messaging around that. Like, look, if you're borrowing from somebody, make sure that this is money you believe you can pay back. If it's a business, it's more understandable. But if it's on more the personal loan side, you don't want to just be, adding to your already big problems.
Can I ask a product question here? So if I borrow money from Brian, right, through Pigeon loans, is part of the value prop to us doing this transaction not necessarily through text messages and an Excel spreadsheet, but rather through Pigeon loans, that Pigeon loans is the one reminding me to pay Brian, not Brian?
Strangely enough, it's an incredibly simple and almost silly feature, but it's actually a major benefit. I'd say, Cesar, I think the number one benefit is Brian's going to be more likely to lend you the money because you're sending him something that's official. You've got a plan. There's some legality around it. So I thought when we started the business, we were actually helping our lenders more. I was wrong. I thought the lenders need this. The lenders want to get paid back. Actually, I think we're helping many of the lenders who lend do it sacrificially, and they have the financial resources to do so, and they kind of mentally think they might lose it. The borrowers, though, this makes that ask a little easier. Because if I go to you, Cesar, and I'm like, hey, I need to borrow $5,000. Can you, send it a wire over? I'll pay you back eventually. Versus, hey, I just sent over, a Pigeon Loans email with all the details. You can review it. We can negotiate on the platform. And here's exactly how I'm going to pay you back. I would imagine you'd be much more likely in the latter case to want to help me out.
And when you say when you reference legal docs, I mean, you all facilitate like contract between two individuals, or?
Yeah, when we first launched, the contract was always there, and then we've now made it optional. Some of our users, if you're doing a business loan, let's say we've had a loan that was $100,000 come in just yesterday. That's a big loan. You need a contract for that. If you're lending your friend or family member, $500, $1,000, you might not want to go through actually signing paperwork. And in America, there's not great recourse on this, right? You can go to a small claims court, but it might be a, money losing endeavor to go through the pain of that, right? So we like to say to our customers, like, the main value here is reducing the awkwardness, allowing the borrower to get the money they need, giving the lender a little more protection that they might get paid back. And we've seen that. We've talked to, we've got this customer, Connor, who's done a ton of loans before Pigeon with family and friends, helping businesses start, helping people in times of need. And he's done them after on our platform. And he's like our favorite test case because his repayment rates are higher. He sees these people for Thanksgiving and it's not as awkward. And that's a real thing. And people are paying him back more. So, he's going to be a lifetime user. And I think most lenders that use Pigeon Loans will never do a loan again the rest of their lives without the product.
So, Kaben, marketplace business is notoriously hard to do. Kind of what learnings have you, any hacks, any thoughts on how you guys are kind of growing both sides? I guess for you need one brings the other.
One brings the other, and we're exploring whether actually building the marketplace itself. There's some real legality around that. What I'm kind of learning, Maria, is like every startup's like insanely hard. And the main learning we're learning here though is like, sometimes when you have a marketplace, our borrower and our lender are different people. They're different age groups. They have different financial resources. Our borrowers are younger. Not always the case, but there's certain, you can kind of create an identity around both of those customers. So we go after them in different ways, right? We've done really well in getting a lot of press and PR. Well, that's, on traditional television, that is our lenders, right? A lot of our borrowers are in places like TikTok. And as a team, it's really weird because those are two totally different, competencies you can have. We really separate them, and we think about very actively, like how we market to them is very different. How we message to them is very different. So I think the main advice there is really, it's back to that Y Combinator advice. Just talk to your customers, talk to them. You have to know your customers at a really deep level. And I'm not talking about just how they interact with your product. The funny thing we learned in Y Combinator was it's really knowing who they are as people. What are their motivations? What makes them fearful at night? What are they hopeful for the future? If you can understand those things, I really think you can build much better products than you just ask them, hey, did you like this color, this button, or, what feature do you want us to add? I think those questions are a lot less useful than like, what was the emotional feeling you had when your brother-in-law asked you for $5,000, and
right.
Why'd you not give the money, or why did you? And those are the questions that really helped us change the product dramatically to be a lot better.
Do you feel like what is next for the company, right? Like where, what stage are you all at right now? You had this raise, you're surely shipping, product developments and all that, but like, what is the focus? Are you guys hiring, or is there a major need that, the Miami Tech Pod community can be helpful in solving? I mean, I'd love to get your take on that.
Yeah, a couple things. Like we've got a core product that we think is working. We think it's creating value. We're really, we're doing a lot of marketing experiments. We'll probably be looking for people in that space, before too long. And then on the other side is, we're trying to really partner with banks, and that's probably another place we'll be hiring eventually, because, the idea there being, these banks deny literally millions of people every year for loans. Well, right. It might make a lot of sense. Instead of saying, sorry, goodbye, they could say, hey, we partner with this app called Pigeon. Check it out. It might be a good way for you to get funding. I think in the long run, we really do want to innovate in the space. If there's a way we can, give people, and we don't have it figured out at all, and we might never figure it out, but if we can give people a way to do small dollar loans with a quick turnaround, basically that payday lending industry, I dream a lot about destroying it.
Yeah.
And if we can destroy it through business means, great. But if we can't destroy it through business means, we'll have to destroy it through political means eventually.
Love it.
Do you think, I have a strong suspicion that like Cash App and Square will be one of the strong players in that space that you guys are going to be butting heads with, right?
They are, right? Cash App lends billions of dollars in small loans today. And
Yep. They're already innovating there. Stripe is incredible. What an amazing business. I'm constantly blown away by their innovation and how they execute. And there's a lot of people innovating in the space. There's some other startups. We're trying to figure out what's our niche. And I think we're kind of learning our brand here. Like our brand is, we are taking a lot of people, frankly, mostly minorities, people that fall below the credit line on the personal side, and businesses that are kind of just getting going. And, it's weird to tell you all, but a recessionary environment, Brian and I, even when we started the business, thought that could be happening. We're not economists, and we're not, we can't predict the future. But in that environment, we want to, if that does happen next year, we just want to be really ready to serve those customers at that time, because we know from 2008 that this type of lending just skyrockets. So yeah, we're looking to innovate. It's a crowded space. It's a tough space, but I think that's true of most everything.
Do you guys keep track somehow of like what people say the loans are for, right? Like, is this because that could be an interesting data set to have, especially like from a macro trends perspective. If more and more people are borrowing a few $1,000s to, for medical bills or for rent or for car payments or whatever it is, like that could be an interesting way to like partner with providers in those spaces to sort of reduce the burden, so to speak.
Yeah, I'm telling you, you guys are reading our product roadmap. We're like, we already have, a general sense. Is it business? Is it debt consolidation? Is it education of some sort? What we're going to do is we're going to introduce some tagging features here soon, so we can. You're right, because that data is incredibly valuable, and it can really help us, zero in. So we're going to. And what's funny is we see the weirdest stuff. I mean, people do these loans literally for weddings. I don't recommend that one, by the way. But they do it for weddings, for home improvement.
Right.
Just have a cheaper wedding. And yeah, but my sister's getting married in December, and I'm like, man, is that how much weddings are? Wow. But yeah, so we see all types of weird use cases on Pigeon, and yeah, I think knowing more about our customers is always a good thing. So yeah, Brian, we're going to even enhance that one more.
Yeah, I mean, I could see some interesting AI ML tools, around that, like especially, I guess the question really is like, a lot of these loans are pre-purchase or pre-expense rather than post, right? And so like I could see someone putting in like, oh, hey, I'm buying a diamond engagement ring, and then the system automatically being like, well, there's a lab grown one that looks the same that's 25% cheaper from our partners at Blue Nile. And then you guys get a lead gen fee to Blue Nile for $250 or whatever it is.
And that is our business model, Brian. That is our business model. Pigeon Loans is a free product. Mm-hmm. So anyone at any time can use it for free. The way we're making money now is we partnered with business banking and personal banking. So when you get the money, it's a great time to give an offer for a bank offer because they just are about to acquire $5,000, $1,000, $10,000. We get paid referral fees. We had to think about our model a lot, and we thought, man, with inflation, with a recession, we want to be a mission-driven company. Not great optics if you're yet another fee and you're somehow benefiting from people's issues. So we like the model, but yeah, that's why you're totally spot on. That's exactly why we need to know more and drill down further into what else can we effectively refer people to.
But man, what a long-term play for you guys where, you know, you really can build a sustainable business that people love if you do not extract value from either end of that transaction. Right. And if you're like, you know, not taking a vig off a loan or fee for the borrower and all that, it's like a business you could be way more proud of, in my opinion, than, you know, if you're like, you know, taking a percentage from, I mean, like in many ways you see early days of PayPal, that was like the biggest criticism of their customers is like, you know, the fees, right? Even if they're cheaper than, you know, the incumbents.
Especially in our case, imagine we start booming because of a recessionary environment. And then,
Right,
you know,
right.
that's not good PR,
Yeah.
Pigeon Loans profiting. And also I'm starting to learn, you know, I'm going to keep doing these startups till I die. That's just kind of my personality. So I'll do my third and fourth and fifth and who knows. And I think you only want to work on things you can be proud of. Like,
Yep.
you know, look, a lot of ways to get rich in this world. We all know wealthy people. We all know people that are not wealthy. There's some happy, wealthy people, and there's some unhappy people. And I think a lot of it comes down to, are you doing work you're actually, you know, frankly proud of, you know? So if you told me I could make, you know, become a billionaire in the payday lending industry, I'd say, I'd probably say, I'd definitely say no thanks, right? It's, yeah,
Yep.
so it's a good way to build a long-term relationship with our customers too.
Love it, man. Kaben, thanks for joining the Miami Tech Pod. This was a fascinating conversation. I feel like we're really rooting for you all to build this company into something big and that's going to impact a ton of people here.
Yeah, great to do it in Miami. Thanks for having me.